Thanks to the SEC approval of Spot Bitcoin ETFs, $1,000 in Bitcoin 1 year ago would now be worth $2,500, a 150% return on your money. Nuts, right? The problem is, you probably didn't take advantage of the move. Don't worry, neither did I. You're smart and didn't want to risk money on something you didn't understand. Again, don't worry, neither did I at the time. Let's fix that problem. I'm going to get you up to speed in less than 4 minutes, and you don't need a degree in finance to understand. Remember, this is not financial advice, and I'm not a financial advisor. Let's first make sure we are clear on what an exchange-traded fund, or ETF, actually is. ETFs pool money together from many investors, similar to mutual funds, and purchase securities such as stocks, bonds, or commodities. Investors do not actually own the underlying assets. The fund provider does. As the investor, you own shares in the fund, and the fund actually owns the stocks or Bitcoin, whatever it may be. The Securities and Exchange Commission recently granted approval to multiple large financial firms to offer spot Bitcoin ETFs. This marks a significant shift, as until now, only Bitcoin futures ETFs had SEC approval. What distinguishes the new spot Bitcoin ETFs from the already existing Bitcoin futures ETFs? Spot Bitcoin ETFs enable investors to directly participate in Bitcoin ownership by holding shares in a fund that possesses and derives its value from actual Bitcoin prices. On the other hand, Bitcoin futures ETFs own contracts based on the future prices of Bitcoin, but do not own the cryptocurrency itself. The prices of futures contracts can differ from actual Bitcoin prices, and these contracts need to be rolled over as they expire, adding complexity and potentially increasing operational costs for futures ETFs. The approval has already had a notable impact on Bitcoin prices, more than doubling since last year. So why is everybody excited? Well, now investors can participate without the downsides to buying Bitcoin outright. No need to worry about your Bitcoin getting stolen, buying Bitcoin from an unregulated exchange, hot wallets versus cold wallets, account passwords, and on and on. Traders are optimistic that spot Bitcoin ETFs will draw substantial investment into the digital currency, increasing accessibility and reducing intimidation. Analysts interpret this development as marking the conclusion of cryptocurrency being considered a novel asset class, paving the way for its inclusion in diverse portfolios. Additionally, there is a possibility that this trend could speed up the introduction of sensible regulations, with a focus on eliminating fraud and solidifying cryptocurrency as a mainstream investment. If you found this information valuable, don't forget to like, subscribe, and share your thoughts in the comments.